Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the Bitcoin market. So the performance of the rest of the previous week since our last discussion on Thursday was not really very impressive. So market was standing in a relatively tight range, making no significant impact on the high time frames. In general, on the monthly chart, so what I would like to say is that actually market, just recall what we talked about, the overall patterns, overall bullish context here, and current placement of the price. Actually, it's hard to call as a positive for the bullish perspective. So first of all, market is flirting with the lows of the January. As you know, the grabber in this pattern is vitally important for a bullish setup. In the case of market will close below it, it means that the grabber will fail. And trend has turned bearish, and it increases chances of the further downward action on the Bitcoin market. And it is very important where the January month will close. But right now, as you can see, market stands below the confidence support as well. The first moment on the monthly chart. Second moment, I just would like to remind you that if you will take a look not at the Bitfinex quotes, but on the Chicago Mercantile Exchange, and the futures prices, they do not have the grabber at all. So market has just closed below the MACD line in December. No grabber have been formed here. So this is another risk factor that may be, usually market participants take a look at the futures prices when they would like to check whether the real grabber have been formed on a retail broker chart. But since in the Chicago Mercantile Exchange we do not have the dominating trading volume, that's why this is arguable whether the Chicago Mercantile Exchange quotes and price levels actually the real tool for checking these moments. But anyway, on the futures we do not have the grabber. Finally, take a look on the performance in January. Market has tested the yearly pivot point of the 4790 and just start bouncing down out from it. Standing below the yearly pivot point in the beginning of the year is also bearish sign. So currently, it's not good time for investing, because it's really, guys, big bets, big stakes stands on the table, and you do not need to take too much risk with trying to catch the falling knife, trying to catch the absolute bottom to make the perfect entry. Since it's really big action to the upside ahead if it starts at all. So if indeed the bullish context will be confirmed, the market starts upward action. It's a long distance to run, and you will have a lot of good options for taking the position with significantly less risk than trying to catch the bottom. Because currently, if you're trying to use some not quite reliable patterns that you seems to be bullish, and maybe indeed market is turning up, so that's really could trap you in the wrong direction. It's with the multiple attempts to do this, you could lose a significant amount of money, so it could be rather expensive. That's why our position, since we have lots of tricky bearish moments here, it would be better to see the clear signs of the starting rally before making an investment. On the lower time frames, on hourly chart, as you could see today later, some options exist that you could try to follow with the keeping risk low, but you should understand that the chance of success of these patterns also stands not very significant. So that's what we have on the high time frames. Currently, we're very interested where the January month will close. On the weekly chart, it's the same story. Market has broken for the flag pattern and stands there. This is also bearish moment. So usually when the market shows the fake breakout, it shows fast return rate back up. But here I do not see it. This market just dropped on next week and stands here. In the first session today, nothing is going on. Also, 618 level has been broken here at this major level. Trend stands bearish in the weekly chart. In a shorter term performance, we could get some bounce, because if you will take a look, at least within the couple of sessions, as you know, we have big numbers ahead. So it will be CPI, PPI reports this week, retail sales release, which might be also very important for Bitcoin as well, because you can see the recent collapse mostly was triggered by the publication of the Fed minutes protocol, which was actually very hawkish, and that has just crushed the Bitcoin market. Even worse than expected, non-farm payrolls release was not able to provide more or less significant support to the price, so it still stands depressed. And with the high levels of the CPI numbers and the good retail sales, very big chance that Bitcoin could drop more. So, but this will happen only starting since Wednesday. So since today, tomorrow, we still have chance that maybe market will show at least some pullback. Besides, recall what we said about the interest rates yields. So market has completed 1.18 butterfly extension. So this target is completed. Yes, thrusting action is very strong, so chance exists that market will just pass through it. But as a rule, in most cases, at least odds suggest that usually market shows at least minor bounce, minor response to the important targets. And that suggests that on the Bitcoin market we also could get some pullback. So if you will take a look at the hourly chart, here we could get some pattern. Currently, if you'll take a look at closely, it's very difficult to call it in the hand shoulders. It's just, you could just barely recognize the shape of this pattern. So theoretically it might be, but well, that's why I'm talking about not time to invest in Bitcoin. But if you really would like to try to take the long position, you could consider this setup, although it's very choppy. I wouldn't call it as very reliable, but the attractiveness of this pattern stands with a relatively small risk. So for example, here at the bottom on the right arm, it will be 41.25, 41.38. Stops should be placed below the head, which is 40.50. Not really big risk here for the Bitcoin value, right? And market still could show some pullback within a couple of sessions. But of course, we do not treat it as a pattern that will trigger the bullish reversal on the Bitcoin market, because it looks a bit, well, not reliable. It's a bit too choppy to call it as there's some preparation for response. It might be suitable for the pullback, some retracement, not more. That's why if you trade on the daily chart, on the higher time frames, you would like to invest with the Bitcoin. We think that you need to wait more. If you're a scalp trader, you trade on intraday charts, well, actually, we do not have currently anything else besides of this pattern. So if you would like to trade, you could try to make the trade with this pattern. If not, just do nothing. On the 4-hour time frame chart, the 40 target that we have specified almost has been reached. As you can see, that response here is very weak. That's why we are not canceling the chances that market will still hit 39.73, and potentially, depending on the statistics that we could get later in this week, 35.60 also could be reached. Actually, we have these two targets, 35.60 and 36.30. Stands very close to each other, mostly based on the relative performance here and how market responds to this. Chances on the downside action we see as a stronger rather than upward reversal. Finally, let's take a look at the daily chart. On the daily, it's also a very important moment. If you remember, we have compared these two types of action, and in general, by the shape, it's very similar to each other. So, for instance, you could see, if I will put it on the top of this has been formed, as you can see here, retracement, retesting of this same level, drop to the new lows, drop to the new lows, and here is most important moment should happen. So depending what will happen, last time on the May sell-off, it was just wash and rinse of these lows and return it back up. Here we have a bit different picture, which is not really good sign. It's because market dropped below the lows and stand there. Actually, market holds on the natural support line. So this is previous consolidation resistance, so support, and now again market has dropped here and stands at this support. Dropping back inside of it, this will be bearish sign, is actually rolled to the bottom, to the 30 even area, also will be opened. But especially if we recall where the market stands on the monthly chart, actually it's a very important moment as well. So currently within this short time period, so lots of things stands on the table, and it will be really a crucial and important level for this market. So let's keep watching. Think about this setup. If you'd like to, you could try it, but it's only mostly for scalp traders. For others who trade on a high time frames, would like to invest in the Bitcoin, we think that it's not the time yet.